Hello, everyone. Today I'm joined by Ryan Graciano, head of product and co-founder at Credit Karma. Where are you dialing in from today, Ryan?
I am in Oakland, California. That's where our office is for Credit Karma.
Great. Is that where the company was first founded, or is that sort of like a more recent headquarters for Credit Karma?
Sort of. Our CEO at the time, our founder and CEO for many years, he actually just recently retired. He was in Oakland, and then he started up an office in San Francisco.
Got it.
I usually say SF, but I kind of feel like Oakland is a little more true.
Yeah. Perfect. Well, I'm super excited for this episode. I feel like Credit Karma is like one of the most recognizable companies in the consumer finance space. So hugely honored to have you on the show. Before we kind of dive into any of the specifics, could you just walk us back maybe through like what your journey was to founding Credit Karma? What did you do after undergrad? What inspired you to make the jump into being a founder of this company?
Sure. Yeah, I was going to school for computer science, which seemed like a great idea in the late 90s. And then pets.com and the .com bubble burst and everyone said I wasn't going to have a job and it was going to be a terrible career. But I stuck with it anyway. I joined a startup, 60-person company. They made software for big banks. They got bought by IBM immediately, which was actually a fine experience, but it wasn't really what I was looking for. And then I met a friend of our Karma wasn't started yet, but our CEO is Ken Lin, or was, and his friend was this guy, Greg Lull. Greg was pitching me on joining this search engine marketing company that this guy, Ken, had, and I didn't think it was consumer enough and big enough, but I talked to him anyway. I think you should always just always take a conversation. It really never hurts. At worst, you wasted 20 minutes. Like, who cares? So I talked to Ken, and he was like, no, this marketing business doesn't scale. I have this better idea for Credit Karma. And that's how we all met.
Wow. Yeah, I think that's been a common theme of many of the guests I've had on the podcast. Is just take the conversation. You never know where it's going to make you end up. So fascinating that it applies to founding the company as well. You sort of talked about who you met and sort of like how you started. Many people, Credit Karma is founded more than 15 years ago at this point. I'm sure the product has evolved a lot. Could you maybe walk us through like what was that founding problem that you guys were trying to solve, and what was the first real product that you guys came out with?
Yeah, I think the marketing story is important because when Ken was running that search engine marketing company with Greg, they were bidding on keywords for big companies like Liberty Mutual and Wells Fargo and all of these big blue chip players. And what they saw was, wow, there's a lot of money floating around in credit. The credit space at the time was pretty crazy because credit scores weren't accessible to the general public. So people were selling them online at great expense. If you were around back then, the freecreditreport.com time when there was like a commercial every 30 seconds, it felt like on television with a band singing about credit scores. So they saw this happening and they thought, well, there's a model here. There's enough money to fuel a business model. And we could talk about that later. But it's clear that in the spend that it exists. And the consumer problem is very clear. All of these companies, these banks are making big decisions about you and you don't have access to the same data that they have access to. You actually have to pay somebody for it, which seems unjust. We thought that we could make that data available to everybody, do a good thing for the customer, and then figure out a way that we could monetize by essentially getting them better financial products, making financial product access transparent to them, which is a bit of a complicated model, but it worked. It took a long time, though.
Yeah. What was maybe like some of the technological innovations that went into Credit Karma being able to offer credit scores for free? Because I think that was like one of the big unlocks that you guys had as a company. But clearly there was a reason why maybe it wasn't free in the past. Was it now you could have like the marketing element to it, like almost like bring people and then sell ad space on the website? Or like what was actually the technological or business model innovation that enabled Credit Karma from the start?
Back then, if you were to go online, you would see credit card advertisements for all kinds of stuff. And they just really had no idea who they were advertising to. So the approval rate, so if you were to get a credit card ad and you're just kind of random customer, your approval rate might be like 10%, 14%, because they just don't know who you are. And there's huge inefficiency in that. You think you're paying for the ad for 10 people, maybe one or two actually gets the offer. You make a lot of people unhappy applying for something and getting declined. One of the things that makes people the angriest, that's like ding to their credit score, it took time, it took effort. You gave someone like your SSN is a lot. What we figured out was that if we could get access to the credit data, we could actually figure out who's going to be applied by what, by sort of reverse engineering the underwriting model of all of these different lenders. That was how it worked back in 2008 to 2012. So what we did is we took that approval rate from like 10 to 15% back then to like 30% and then 40% and then 50%. And then today you have Lightbox, which is way higher. It's like 90% plus territory. But back then it was just a really frustrating and wasteful experience. Like the consumer spent a lot of time and energy on something that they then didn't get. It was frustrating. Banks were wasting tons of money, which they didn't really have in 2008. It's not a great time for the financial industry. Our innovation was we made it way more efficient. And on the consumer side, if you want something, if you like know what you want, now you know if you can get it or not, versus it used to be you just go apply.
So it was almost like getting back a little bit to that search engine marketing aspect of it, of better targeting ads, but just happened to be in the credit card space. And that was like sort of like the real unlock in some sense. It was still like a marketing driven business.
Yeah. And that's where we started. And then where we came over time is that, okay, say you want to get a loan, whatever loan it is, you need $10,000. The old way of doing this was you would Google loans. You'd go to some site that aggregates a bunch of things. You would individually apply to each loan, give them your life story, all of your information, your SSN. They'd pull your credit, everything. You would get declined for maybe half of them. No transparency into rates, no transparency into what you're actually going to get. Now how we work is we essentially work with the partners so that they have a model that sits on our Lightbox platform, and it can actually see who's likely to be approved for what, which is how we get such extremely high approval rates now. So now the consumer comes, they're like, hey, I need 10 grand. And we're like, well, here's the top 4 offers in order of how good they are for you. That is just dramatically different customer experience. And it's blind to the partner. You don't have to give them your information. They don't know who you are until you actually apply, which is also like huge for privacy.
Yeah, that's super fascinating. I want to go a little bit back though, and you kind of alluded to it, of this founding story of being in 2007, 2008, peak of the financial crisis, trying to disrupt the credit card, the banking industry a little bit. What were sort of like the challenges associated with doing that? I mean, I'm sure it must have been more challenging to raise money, to sort of get customers on board. Yeah, so just could you walk us through a little bit of like, how did you guys maybe overcome some of those challenges to be successful and survive that difficult period from an economic perspective?
We started at the peak. I signed on for this in 2007.
Things are great.
Yeah, everything's going to be up and to the right forever. Look at all the money flying around. Look at all the loans being underwritten. It just seemed like nothing but opportunity. And then when we launched in 2008, not long after, it was a bloodbath. I mean, banks were closing. Nobody would talk to you about investing in a like a fintech startup. I mean, that was crazy. That was a toxic place to be back then. We needed to raise money for a Series A, and it was something like we approached 40 plus different investors and just got the door slammed on us. And the terms we were raising were not crazy at all because we didn't have any money. And we finally got one offer from somebody, and it was horrendous. It was a $2 million investment on like a $4 million valuation. Oof. That was how much they wanted to take. We said no. We tightened belts even more, which is hard to believe. It was awful. And the model was based on, we actually needed those advertising dollars that the banks were spending to convert into acquisitions on our site. And then they all dried up. So not only can you not raise money, there's not actually any money to be made. The only silver lining was actually when things are down like that, the consumer interest goes way up. So we had a ton of traction from members. I mean, we were growing quickly, but we saw great feedback, but we couldn't convert any of that growth and actually make it so that we could advertise effectively because there's just no money to be had.
I mean, you talked about tightening the belts a bit. I mean, was it just kind of batten down the hatches and waiting for times to improve? Or did you guys eventually strike a Series A that under better terms to sort of give you some more money to stay afloat?
We finally hit our Series A in 2010. We lasted that long. I see startups now, the people they hire and the money they raise. I mean, back then, I was the IT, customer support, security, platform, and engineering departments.
You did everything.
Yeah. I mean, we just couldn't hire anybody. So we figured out ways to make it all work. And we did, I would almost call them side jobs. Like we took our site and white labeled it for banks. So we had like a SearsCreditScore.com. And that was a white label of our site back then, just because it gave us enough money to kind of get to the next horizon line. Yeah.
Yeah. Wow. Once you were finally able to raise that round, I mean, what was it that was actually then enabled by it? Because I think there's a lot often you talk about today how startups raise a ton of money, and it often means that they can have like these bloated cost structures and aren't super efficient. Do you think it maybe almost helped you in some ways that like you were really lean as a company and really hyper focused on like what you needed to do as opposed to having the luxury of a $10 million Series A at the time to sort of spend around?
I think it's true of people and companies. When and where you were born and raised, it kind of forges you and changes your mindset. And we were in this place of extreme scarcity and fear that anything we gain could just be destroyed by a macroeconomic change. Because of all that, we developed a lot of fiscal discipline right away. We were not a company that wasted a dollar. And when it came time for like COVID and those later crises, I mean, we were prepared. We had huge cash reserves. We knew exactly what to do and how to do it. And that's because of the kind of company that we were. We knew the value of money. And I think people sometimes in an upcycle take for granted, like, oh, I'll just raise more. No, it's not always there. Be thoughtful about what you take and when.
For sure. I now want to move back a little bit to talking about like the technology side. We hit on it a little bit, like the core innovation at the beginning of Credit Karma. Obviously now, like a lot of what you guys do is around data analysis, data science, and that space has become tremendously fast moving with AI and machine learning and all these new technologies. So curious like how Credit Karma is now integrating maybe some of those more leading edge technologies into the core product or into new products.
This has been our bread and butter for a long time because this is really our competitive advantage. Is we've always been great at this. So from a pretty early point, we invested a lot in data. That was the main thing that we invested in, and we invested in it. We were always kind of like on the bleeding edge of whatever technology, and we were willing to replatform or take the pain if we thought that it was worth it. We were really early adopters of things like Google BigQuery and a lot of the Google Cloud platform. We went that direction because even though at the time I would say they were really pretty immature in a lot of respects, the way that they dealt with customers, their in general operational posture, just working with them was weird compared to like an AWS, which was so professional and buttoned up and had everything you could possibly need. But we said, well, you know what? Our competitive advantage here is the data, and we have to be amazing at it. And the tools that they had at the time we thought were just far ahead, and we believed they were going to get better.
Yeah.
We invested a lot there, and then we invested a lot in people. We always made sure to hire the best people that we could find. We really hunted for folks, and we have a lot of that DNA. I mean, we were a very math-heavy kind of leadership team. So, our Ken, the founder, he's a math guy. He worked in underwriting and knew the space, and his type of marketing was very math-heavy. We were good at hiring those folks, I think, because we knew what to look for.
Going back to this data question, there's a lot right now in terms of like public, private data. Everyone's training their AI models in the same public data. And so having that private data is really valuable and important. Where did you guys source the data, especially in the beginning when maybe there was like a lot less just like public data available on financial backgrounds, on credit, so on and so forth? Is it that people, when they sign up, give you the data that you need, and over the course of time, you're then able to use that to better understand? Just curious where it comes from, I guess.
Yeah, our perspective early on was data comes into our platform, it doesn't go out. So we would collect from any place we could get it and then use it to the customer's advantage, but then create this wall, kind of like I was talking about earlier, so that when you're applying for something, the other side can't necessarily see until you've actually made that connection. So we got it from all kinds of places. The credit bureaus, we looked for alternative data sources, any alternative data source we could capture. We did things like buy your vehicle information, which is useful if you're going to try to get an auto loan. We went after income data because that's great for mortgage and personal loans. So the tricky part I think about data is it can be, everything sounds good, but it's best to just kind of hone in on what's the use case that I'm trying to solve and then go after it. We were very tactical with what products do we think people need? And then we would go after it and get it. The challenge was that a lot of these data sources were immature at the time. Like their own infrastructure might run on a mainframe. We wanted real-time data. We actually had teams that would go and work with these partners to help them kind of get up to speed, modernize, work with our APIs. It's very partnership oriented to get that stuff done. It's not like just cutting a check. You actually have to go and you create a relationship there.
Mm-hmm. That's interesting that you almost had this consulting piece or bespoke to help these large financial institutions get up to speed, given that you were the ones that had the expertise and not them. I'm sure that's changed a bit now. I mean, I know banks are still very slow to moving to the cloud and some of the newer technologies, but I imagine that's slightly different today.
People recognize the need, right? There's a lot of modernization that's happening. There are still a lot more mainframes out there than you might expect. The mainframe is alive and well at a lot of institutions.
Yeah, that's crazy. Another piece I want to talk about is when we think about the credit card market, and it seemed like COVID actually really accelerated this. It sounds like it's one of your core draws to the product is people looking to open up new credit cards, is that now it's all about the features that you have, and it's much more like a consumer product that you're buying, right? Am I getting the Amex Platinum that gives me access to this lounge versus the Chase Sapphire, which gives me access here, here, and here, it gives me DoorDash for free or whatever the case may be. How is the product, I guess, of Credit Karma sort of changed to maybe reflect that more sort of consumerization of financial products like credit cards that offer more than just financial benefits?
Some of the credit card companies definitely differentiate themselves more on what their experience is. And it really depends on where you are in the credit spectrum. If you're really on the high end, you start to really value those features more. If you're in the middle, you're much more concerned with hey, am I just kind of getting the value that I could be getting? I want to get what other people are getting. And if you're on the bottom, obviously, you're trying to get to the middle. At the top, we've worked with the credit card companies and the loan providers to try to help differentiate their products on our platform because they have unique value propositions, they have unique benefits and so on. So we've used tools like generative AI to try to bring some of that stuff forth. Because it's hard to, in a little blurb, explain to you why the customer service here is so great or why the experience at the lounge is better than every other lounge. I think Amex has done a good job with the Centurion. But the benefit of AI is that if you're interested in one of these angles over another, you can query and poke at it, and it can give you a reasonable and rational response. That's hard to do by you can get it, but you can spend 30 minutes to an hour wading through people's opinions online and reviews, or you could ask AI to summarize them for you, and the latter is a lot easier.
Yeah, that makes a lot of sense. And I think to your point, there is a lot of information out there now. And so being able to decipher through it more rapidly is key. I now want to pivot a little bit to talking about your leadership in managing a large organization. I mean, as you talked about when you first started Credit Karma, you were 8 hats at once in terms of the tech organization, and you did everything. And now I imagine it's many teams, hundreds of people, large organization. And so how has that journey been for you as sort of a manager, learning to be an individual creator to now a leader of a broad organization? And what are maybe some of the key ways you've maintained this agility and this culture of innovation that you've kind of talked about?
In the early days, I was really on about making sure that everyone felt that they had autonomy and purpose, so that they felt like what they were doing is important and they could go off and get things done. And if it didn't work out, they weren't necessarily penalized for it. We just learned to move on. And that was easy with a small team because I can give people purpose one-on-one by giving them a lot of context because they get to talk to me directly. And the autonomy part, I just didn't have time to do 99% of things. So it's just this is what you do now. And I'll look at it if you need help, but I won't be in there. And the benefit of how we scaled is during that downturn, I had time to actually learn the nuts and bolts of the direct management stuff, like the 1 and 2 team type things, and really get acquainted with that. And then we scaled very fast in 2012 and beyond, kind of doubling year over year type of growth. those muscles that you built, they just don't work anymore because you can't rely on those relationships. I can't talk to you and give you purpose anymore. It doesn't work. I can't guarantee that you have autonomy either, because what if your manager isn't doing that? What if your peers don't give you that? So now it's about like systems and process and wide scale comms. And I think all of it is skill building. You have to actually want to do it. And I used to do this thing every year where I'd kind of sit down and write out like a job spec for my own job next year. And if I were to hire someone, what are all the skills that they would need? And I never had them because we were growing so fast. It was always like, okay, I'm going to have to learn how to do this thing. And then I would always ask myself, do you even want to do that? Because it's a different job. When you go to 100 to 300 people, it becomes a very different job, and 300 to 1,000 is even more different. And at some point, it kind of feels like all you do is talk on stage. That's very different from where you began. So it might not be what you want to do. And I don't think there's shame in that if you're just, this isn't for me.
Yeah. But you talk about sort of like upscaling to the next and developing those new skills. Is it that you just learn by trying and failing, or reading books, mentorship? I mean, like, what was the kind of helpful things for you in making those step ups year over year?
I learn best with experience. I guess everyone's different, but I'll tell a story about. I was an awful public speaker because I'd get so nervous that the adrenaline would just block out any ability to think. Like many people, I'm sure. So I avoided it at all costs, which does not work even beyond 20, 30 people. You have to start talking in front of groups. I did this all hands, I don't know when, like maybe 2012 or something. I was so nervous, I was like shaking visibly. And I remember overhearing like a couple of young women in the front row, like joking about how obviously nervous I was. That feels good. And so I realized, hey, I actually just need, part of what I have to do is be comfortable with this. And I think some people would do Toastmasters or whatever, but my strategy was, okay, this is the exact thing that I don't like doing. So I'm just going to do it a lot. And so I actually booked basically an all hands for the engineering team every week, which is a not uncommon ritual. And I could argue it was good for company morale and a bunch of other stuff, but it was really so that I could just get better at this and then get my leadership to get better at it. And we could all get more comfortable. It did work. After a while, you just get used to it.
For sure. Yeah, it's like a muscle like everything else. If you don't use it, then you're just never going to develop it and be good at it. In terms of imparting that same, now that you're in a much bigger organization, and you talked about how when it was smaller, it was easier to be a little bit more agile and autonomous, but now you're not that small organization. And so what is it that kind of keeps people, or like the organization as a whole, being able to innovate and bring new technologies in? Is it just that there's organizational and leadership commitment to, we're going to now move to the cloud, we're not going to move this, and we just bite the cost early? Or is there like leadership aspects too, from like a more tactical perspective, that help?
I think you have to be realistic that you're just not going to move as fast as when you were that little. People can say a lot of things about operating like a startup, but the truth is you don't. So be realistic about it. But you do need to be aggressive about adopting new technology, I think. You need to be not stuck in mainframe land, because that's a bad place to be. And I think it takes a certain kind of leadership to do that. The kind of people who are willing to embrace the pain. It's just painful at a big company to go and change up your data store. It's not like just migrating the data. It's now you have all this security and compliance and paperwork, and there's audits to be dealt with and a zillion things that when you were a startup, someone has done it. And then you would consider all those things after the fact. Now it's not like that. Now there's 1,000 checks and balances. So you actually just need leadership that's willing to push hard. And I think a bad pattern is when you have leaders who are kind of like, oh, well, we'll work through all those issues. And there's like a weekly, they're catching up every 2 weeks or every 3 weeks to like talk through. That's so slow. They have to get in there and get like a daily or every couple days kind of pushing through what's today's blocker, even if it's just like a 15-minute type of thing, to keep pushing. And it gives everyone the sense that, oh, this is important. Sitting on the old data stores, it matters. We're going to fix this.
Yeah, it's just like the commitment and the organizational will to do it, I guess, which just gets harder as you get bigger. Speaking of innovation, though, since you guys have started to today, both on the technology side, but also just on the financial services side, a lot of things have changed, or products have come in vogue and gone out of vogue, and new technologies are now hot and others aren't. If you had to sort of reflect of like what the fintech or the financial services world will look like in 20, 30, 5 years from now, what are maybe some of the things that you think are going to be particularly big for Credit Karma and big in the fintech space?
For Credit Karma, what I would love to see is we've gotten so good at understanding who the consumer is and what they want and connecting them to financial products. I think there's a real opportunity for us to just start to take over kind of routine and mundane things. Automatically refinancing stuff for you. If you want a mortgage, we just make that happen for you. Automated figuring out, like, do you have a surplus in cash or are you falling behind in cash and what should you do about it? A lot of these things are very deterministic and can be figured out. So I think there's a ton of opportunity for us as the technology gets better. The AI stuff really matters because you have to feel good about what we're doing for you. And the AI really helps us explain what is happening behind the scenes. Otherwise, you can't get confidence. And in fintech in general, particularly in America, the systems are antiquated and a lot of the rules are antiquated. We're slow to move money around. We're just kind of slow to do everything. There's still wet ink on some stuff. There's a lot of manual everything. The regulations are made for a prior period. I talked to a mortgage company years ago. They were automating the mortgage process, and they had to get the back-end provider, I think it was Fannie, to accept this document from them. And they wanted people to take a picture of their phone, right? It's not rocket science, and then submit the document. And they're like, oh, well, we can't accept a picture because a picture could be doctored, but we will accept a PDF. Really? They patented a technology to convert these specific format of picture to this specific PDF. And they wasted so much time on that just to check the box. 20 or 30 years from now, I hope that we've gotten rid of a lot of that baggage and can actually just do this stuff. Everything should be digitized. You shouldn't have to dig for physical docs.
It's a good point because it feels like when you go to particularly like places in Europe with like Revolut and some of these really digitally native banks, it feels so much more seamless than what we have here, where even like the digital banks are basically built on like a core banking system of like a regional bank somewhere. And it's not actually like a truly modern bank. And so, yeah, I mean, that'd be a great future. I mean, like, what do you think if, say, we were to have a landscape like that with just much better sort of underlying regulation and technology, like what new products would Credit Karma be enabled to do?
I would love to see us be right in the middle of your cash flow and then in real time making adjustments to your financial profile.
Got it.
And you can do that if the data is timely, which often it is not right now. Like providers don't furnish it that fast. They don't even process it themselves that quickly. And then if I wanted to say, okay, I can see that you're putting too much on your card and you're not going to make your payment, I'm just going to real time refinance that to something that's like a 0%. And then I could even like in the moment say, hey, don't worry, your next purchase will actually be on this new thing. It requires a lot on the back end to make that happen. And some stuff should really happen with the partners too. I mean, the way that Google and Apple kind of have the wallet thing locked down. If you look overseas, there's been pressure on that. I think that limits innovation. I'd love to see third parties like us be able to develop like a wallet that sits on Apple or Google's platform so that it can actually do some of this stuff for you.
Mm-hmm.
Because there's a lot more ability to move the money and actually do the stuff if you have the people who can do it at the point.
Yeah, that'd be a great future, I feel like, because I know it often feels very opaque to understand where your money's being spent. Having more visibility through a single point would be much appreciated, at least on my end. I kind of now want to move towards the closing aspect of the podcast. And I want to hear, looking back on your career and going to that first 60-person startup to now being the chief product officer of Credit Karma, which is a massive company today. What were some of the pivotal moments that influenced your career? I mean, obviously there was that first conversation that you had with Ken, but what are maybe some of the other pieces that you look back upon and are like, wow, that was a career-defining moment for me?
There's been, I think, a few moments at Karma that we thought the company was just going to die. And so the kind of coming to terms with what that would mean and how much did we really believe in it and how much do you want to stick with it? In 2008, we thought we were done and we chose to stick it out for years. really from 2008 to 2012. And I look back on that, and I don't know if my current worldview, my current person would have made that decision. I think I would have been more impatient. And at the time, I just really felt like we had something, and I was just going to stick it out and have this grit. And then seeing it all work out years later was wild, because at the time we thought, wow, we're never going to cross 10 million customers at this rate. Actually, at one point, I remember in like 2010 or something, we were talking about, geez, what would it take to get to 5 million? And then in 2012, we were picking up like 15 million a year, 16, 17 million a year. Those are actual humans identified by their SSN. It's not like most people's user count. They're actual individuals. And that was very transformative, I think, to like just realize success. It's not like what I think you often read about. You usually read about the rocket ship and people just takes off. A lot of it is just grit.
Yeah.
Sticking with it. That, I think, was one of my biggest learnings.
Do you think that you talk about now you'd maybe be more impatient? Is that because you're 15 years older than you were back in 2010? Or is it now that you've tasted success, it just changes your mindset a little bit? Like what maybe creates that dissonance between the two?
I do think there's something to age and life stage and all those things. And yeah, definitely as there's, or at least as I've gotten older, there's less patience for that kind of 6-year type of journey to get to something. Feels like a big investment. When I was in my 20s and I kind of felt like I had something here and I could just push through. I don't know. I think a lot of people would say the opposite, right? You're young and impatient and want to push. But I think at the time I felt like I had less to lose.
Sure. By sinking 4 years into a company.
Yeah, which I don't know. A lot of what I would say to people is, hey, most things don't succeed if you really don't feel like it's going anywhere. And there are other fish in the sea. And that's why I'm like, if I were to use my current mindset, I don't know if I would have stuck with it in the same way.
I guess for aspiring entrepreneurs, a lot of people who listen to this podcast are MBAs who are considering like starting their own company. How would you maybe advise someone to like break down that decision of, I've been working on something for a couple of years now. I love this product. I'm super passionate about it. It just hasn't taken off yet. Like, should I just hang up the cleat, so to speak, or keep going?
The operative point, and the reason I think past me made the best decision, was people who used it loved it. And that was why I stuck with it. Because I was like, people really like this thing. We just can't get the model off the ground to market it and get it out there. But the people who use it love it. That gave me the confidence to keep going. I think when you're cranking on something where you don't have those super users, you don't have those people who love the thing, then I'd be much more skeptical and impatient. You need some champions.
For sure. I think that's a good kernel to hold on to, so to speak. My last question for you is maybe a little bit more of a personal one, but Credit Karma is all about managing your personal finances and financial wellness. MBAs are maybe not the best student body to sort of have this about, because we just spent 2 years and $200,000 going to school that we maybe didn't need to go to. But if you had one sort of piece of financial wellness advice, what is something that you apply in your own life that you would recommend to other people to do?
Present value of money. I don't know that it's exactly where you're going with the question. To me, that's something I'm not sure that I have always understood as well as I think I understand now. There's this book that people are talking about, Die with Zero, that's been floating around. And the concept is that, hey, you have to think about what you can actually do with that cash now versus what you could do with it 50 years from now. And I think when it comes to financial wellness, you need to be thinking about overall wellness. What's the money for? It's to enable your life. And when I was in college, I went on a study abroad that had no educational value whatsoever. It was like a total waste of time. It burnt a lot of cash and actually took out debt to do it. Nothing about that made any sense from traditional financial whatever, but that's an experience that I could never have in the same way now. It just would not be what it was back then. So I think you have to add that to the value calculation. Maybe you could afford a better trip to Japan in 30 years, but is it really going to be the same? It's not. Think about how are you actually planning to use the money? And to me, the idea is to not just accumulate endlessly and then be gone. The idea is to at each point in your life, use it optimally And I think that actually this generation, the kind of latest college crop, is much smarter about this than my generation and beyond. Like what we were told was, hey, just hoard.
Yeah. And just wait till retirement to enjoy.
And when your knees are terrible, enjoy that ski trip.
As somebody who just took a ski trip to Japan and spent probably way too much money on it, I'm glad to hear this advice. That was the time to do it. I did hurt my knee though, so that was less than optimal.
You'll heal faster.
Exactly. It's not that bad in the grand scheme of things. One final question. I know I said one. I want to debunk this myth of, is it actually bad for your credit score to check your credit score?
No, it is not. It's a free check. Does nothing. Does nothing.
Okay. Now that we've probably debunked the biggest myth about credit scores, I just want to thank you again so much for doing this episode. I really enjoyed just getting to chat with you and learning more about Credit Karma's story. It's a brand that I knew a ton about from just the internet, but probably didn't know a lot about the founding story and everything that went into it. So I really appreciate the time.
Thanks for having me. I had a great time. And yeah, if you don't have the app, check it out.
Yeah, will do.